Welcome back to Alpha Recap, your aftermarket rundown of the headlines that moved the tape. We've got a full slate today: payments resilience, a big Middle East financing story, and some crypto filings that could ripple into equities. As always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack. And for listeners, remember this was recorded after the market close. So we'll be talking about what already happened during the session.
Exactly. So let's kick off with payments. Visa and Mastercard were in the headlines again as incumbents that looked poised for another solid quarter. But the real swing factor is cross-border volumes.
Right. Domestic card activity was supportive, but analysts flagged travel-related and foreign exchange flows as the primary upside or downside. So, what really stands out here is that while everyday swipe volume held up, anything tied to travel could change the story quickly.
If international travel keeps recovering, cross-border volumes pick up, and that lifts margins because those transactions tend to carry higher fees. If travel stalls, revenue growth could slow.
Analysts said to watch management commentary on cross-border metrics in the upcoming earnings calls. That's where we'll get the clearest signal on whether the momentum was broad or concentrated in domestic spending.
And for listeners who want the practical view, watch travel bookings, airline passenger numbers, and FX transaction trends. Those are the macro indicators that feed into cross-border card volumes.
Exactly. Okay, moving from payments to banks. JP Morgan showed up in a big financing story tied to a Kuwaiti oil pipeline stake sale.
JP Morgan being named in a syndicate reduces execution risk for that sale. When a big bank lines up financing, it makes buyers more confident and pushes the deal closer to closing.
Right. And the other thing is, banks that participate will take concentrated exposure to regional energy assets. So credit investors and bank equity watchers should track the financing terms and any contingent liabilities closely.
In plain English, if a lender helps bankroll the deal, the lender's loan book can see more exposure to Middle East oil infrastructure, and that changes risk profiles for those banks.
And connected to that theme, Walmart took a multi-tranche bond deal to market. Multi-tranche issuance can smooth out a borrower's maturity ladder, but the market will focus on coupon levels and durations.
Investors will watch whether new issuance reprices peers or affects corporate credit comps. So the coupons and the size of each tranche matter. They affect short-term interest costs and potentially equity sensitivities if capital allocation shifts.
Yeah, that tracks.
Shifting gears. Crypto was definitely a headline driver today, and it's worth spending a minute on the specifics, because these items introduce liquidity and regulatory questions.
Agreed. First up, Bitmine Immersion Technologies disclosed what they called record Ethereum holdings and a large crypto plus cash figure.
They reported holdings described as 5,078 million tokens and said crypto plus cash totaled about $13.3 billion, claiming a stake just over 4.2% of circulating supply.
That number raised eyebrows. Analysts note it's important to validate on-chain records and the underlying filings, because headline figures that large can look inconsistent with known circulating supply metrics.
So, what really stands out here is concentration risk. If one public company holds that much of a token, the company's equity can act like a lever on that crypto's price. More volatility for shareholders.
And you also get regulatory and custodial scrutiny. Big on-chain movements attract attention from exchanges and regulators. So watch for follow-up filings and on-chain transfers.
The other crypto item was a Form 144 related to the Grayscale Horizon Trust. The filing listed roughly 87%, 64%, and 8% in different lines, numbers that often precede share placements.
Form 144s can presage increased free float or selling pressure. Traders should watch for actual dispositions or clarifying statements. The filing itself isn't the sale, but it often points in that direction.
Connection here is clear. One story is balance sheet concentration. The other is potential supply coming into the market. Both can transmit to related equities and add to volatility.
Quick reaction segment. These are the things traders said they were watching. volume spikes, on-chain validation, and timing of any actual share placements.
Let's hit energy and renewables next. Two parallel threads in the market right now. On one side, you have the Kuwaiti pipeline financing I mentioned, and on the other, project-level renewables activity.
Hydron Energy launched an RNG upgrading platform at a landfill in British Columbia. Management called it a breakthrough for cost-effective renewable natural gas, but crucial capex, capacity, and offtake details were missing.
So investors should track permitting, commercial contracts, and pilot economics. Without those, it's hard to model revenue or cash flow implications.
And coming back to the pipeline financing, the bank syndicate raises the probability of deal close, which matters for regional asset values and for the bank's syndicated loan books.
I mean, when you step back and look at this, it illustrates the bifurcation in energy markets. Traditional hydrocarbons being monetized through large asset deals, while renewables are trying to scale with project-level innovation.
Right, that split is a major theme for sector positioning and credit allocation decisions.
Quick reactions, very short.
Hold on, say that again.
Yeah, that tracks.
Okay, a few corporate and product stories to round things out. Becton Dickinson is presenting at a big healthcare conference on May 12th. Those presentations are often where management lays out margin or strategy shifts.
World Financial Group appointed a new chief operating officer. Hires like that often signal a focus on distribution and advisor recruitment, which can be material if they start to quantify advisor counts or productivity.
Alu House made a noise at the Modular Building Institute event. North American debut and multiple awards for a 7-story steel modular solution. Awards and industry recognition can accelerate commercial uptake if they translate into contract wins.
And Adobe had a brand activation at the Adobe Summit with Major League Baseball. 3,000 custom baseball activations. It's a qualitative positive for their personalization platform, and analysts will try to quantify the customer engagement lift.
Future Market Insights also flagged expansion in industrial disinfection. Companies like 3M and BASF were called out as suppliers that could benefit from continued demand.
Let's run rapid fire through the data points that traders flagged today. TZA fell about 1% to $5.04 on heavy volume. Keep an eye on inverse Russell exposure for short-term volatility.
Grayscale Horizon Trust, Form 144. Those percentages we mentioned could lead to follow-on dispositions. Walmart announced the multi-tranche bond sale. Watch coupons and tranche sizes. JP Morgan was in the Kuwaiti pipeline financing syndicate. Hydron launched that landfill RNG project. And Bitmine's big ETH claim and the $13.3 billion crypto plus cash headline. All items to verify.
Analysts note the common thread across these stories is liquidity and financing. From bank-led project finance to corporate bond issuance and Form 144s, capital flows are shaping near-term market dynamics.
And the crypto intersection with equities was another recurring pattern. A concentrated treasury or a potential share placement can create equity-level exposure to token price moves.
So what should listeners watch tomorrow? First, any official syndicate release or financing terms on the Kuwaiti pipeline? That will confirm pricing, covenants, and timing, and tell us more about bank book impacts.
Second, look for follow-up filings or on-chain evidence from Bitmine to validate the Ethereum numbers and the crypto plus cash assertion. Discrepancies would be headline risk.
Third, pricing detail for Walmart's bond sale. Coupons and sizes will move credit comps. Fourth, trading volume and any actual dispositions in Horizon after the Form 144. The filing alone wasn't the sale, but it's a lead indicator.
And finally, early work on Becton Dickinson's May 12th presentation. Any slide leaks or guidance shifts could be a catalyst for healthcare equipment names.
Quick wrap with takeaways. 1. Payments incumbents remained resilient domestically, but cross-border volumes tied to travel were the main sensitivity. 2. Bank-led financing reduced execution risk on a sizable Middle East oil deal. That shifts credit exposure toward participating lenders. 3. Crypto disclosures highlighted concentration and potential supply risks. Validate on-chain and filing details. 4. Energy stories continue to split between monetized hydrocarbon assets and experimental renewables projects that need CapEx and offtake clarity.
And remember, analysts note these are themes to follow, not investment instructions. This is informational only. We're not recommending buying, selling, or holding any specific security.
Final sign-off. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening to Alpha Recap. We'll be back after the next close with more headlines and context.